Good morning, traders. My name is Michael Sabo here with RJO Futures, senior commodities broker on Friday, September 7th. We're going to use some commentary here in the energy market. So what do we got going on here this morning? Well, a little bit of a weaker tone right now. Crude prices started off a little bit firmer there on the overnight, currently down about 20 cents, trading around 95.33. We got the Brent down around 113.38. That's off about 11 cents. Give me a call. You want to talk about that spread. A lot of good opportunities there. For those of you that don't understand how to play that spread here, like I said, give me a call. I'll be more than happy to go into detail and talk to you how you can look to position yourself in that. Taking a look here at the nat gas, quite a bit weaker right now. We're around down about 8 to 9 cents here right now. So seen some weakness spill over there. And then looking at the complex, which is really kind of mixed, the RBOB is up significantly. That's up about 3.5 cents. We're trading around 302.70. And then we've got the heat actually weaker right now, around 314.07. That's down about 18 ticks there right now. So certainly a little bit of a mix there. But what do we got going on here? What's happening here in crude prices here? Well, we did just have a pretty disappointing jobs number come out here, the unemployment number that came out, and a lot weaker than expected there. So, outside markets were much firmer here getting started there on the overnight and early this morning. We've seen those kind of turn here just a little bit. So I think, what you're going to see is with that number being such a big disappointment, and if we take a look at, something here, the inventory numbers, which we already saw. We got out the EIA number yesterday. We came in a draw of 7.4 versus 5.5, so bigger than expected draw, but inventory levels, we're still running year-ago levels, 4 million barrels higher, and if you look at a 5-year average, we're about 22.8 million barrels higher. So the supply side still looks pretty good, obviously. It's the demand side that once again is coming into question, and with this weak unemployment number, again, traders are kind of questioning it. So, where are we heading from here? Well, looking at the lows here, yesterday's low we were down around 94.59. Today's low so far we went down to 94.55. We are back below the 200-day moving average. So I think what we're looking for is if we can take out today's low again and start moving underneath that, I think we're going to start to see some sell-off as we head into next week. Now, short of a geopolitical event or something along those lines, that could cause a spike in the price of oil. But I think if you look at the oil chart right now, we've been kind of consolidating in a nice range here right now. I think ultimately we're going to be heading down towards that 50-day moving average, which is coming in right around about $90 to $91 a barrel. So I think traders should look for some weakness in there, but be cautious here if you're playing it on the bear side of the market, because we have seen crude prices spike here from time to time. But ultimately, my opinion is I still like the crude on the downside. So give me a call at the trade desk here. You want to talk a little bit more detail, 800-367-7290, or shoot me an email. And of course, remember that futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.